Hey, this is Rod Cleef, and you are listening to the Mailbox Money Show with Bronson Hill.
All right, welcome to the Mailbox Money Show. I'm your host, Bronson Hill. I'm very excited today to have my friend Kevin Bupp with me, who's awesome. He has multiple podcasts he's done. I've been on his show recently, and he has been a mobile home park guy for a long time. We also get into kind of how he made a bunch of money in single family, he lost a bunch of money, and that's like a common story, right? People have challenges. So we talk about what are some pivots that he's made. He's also gone into buying parking lots, right? Parking lots, owning a key piece of land, maybe downtown in a great market, over time, that's going to become more and more valuable. So there's kind of a value add play there as well. We get into that, and we just get into, what does it look like to be a cash flow investor, particularly in mobile home parks and some of these other assets. So I think you're really going to enjoy this interview. Let's jump in, and I'm excited. All right, welcome to the Mailbox Money Show, Kevin. How are you?
Bronson, my friend, I'm doing great. Always good to see you. So
I feel
excited
like
to
when
be
I
here.
see you, it's just like it's just a happy feeling. I get just like the Florida vibes. I think of Sunrise Capital. It's like, I just feel I live in Southern California, but it's been kind of cool lately. So I just love that you just always have this joyful personality. But for
Yeah.
people that don't know you, would you just give a little intro of, you've been doing this for years and years, or somebody that when I first got started, you were doing it, and you've been in mobile home parks primarily and doing other things. But can you give people your story of kind of how you got to where you're at, and how you found mobile
Yeah.
home parks? Now, there's a story there on from you starting with other things and kind of finding yourself to that niche.
Yeah, sure thing. And yeah, I kind of age myself when I give this story, but in any event, I always joke and say I've never had a real job. Bartending was about as close as I got to a real job. So luckily that real estate found me back when I was 19 years old, when I was going to community college, trying to figure out what the hell I wanted to do with life, and was tending bar, having fun doing that, but always had an entrepreneurial drive. I mean, I had a paper route when I was 12. I would go shovel snow, I'd mow grass back. Nowadays, back at that age, like it would be like child abandonment or endangerment, what have you, if you had to like make your kid shovel snow or mow the grass. But back then it was pretty cool, right? Go around and make extra money. And so anyway, I was always trying to make money, on my own, and ultimately got really lucky. And at the age of 19, met an individual in my local area named David, and Dave was a real estate investor. I didn't know too much. I didn't know anything. I'd never read a real estate book. I mean, I knew my parents had a loan on their home. I didn't know anyone in our social circle that owned rental properties, no business owners. I mean, both my parents worked full-time jobs. Neither one had a college degree, just kind of blue collar living, but, always had everything we needed, right? So we weren't poor, we weren't rich, we were somewhere in the middle. But I met David, and he lived a very different lifestyle than I. I mean, it just seemed he had a different swagger, drove a very different car, just seemed to have a lot of flexibility. And long story short, I became friends with him. And within a few months, he invited me to a conference down in Philadelphia that he'd already paid for. It was Ron LeGrand, which is the guy still around today teaching, but it was a Ron LeGrand conference on wholesaling and fixing flipping homes, and I attended, and that was the start of it, man. I came back, Bronson. I was super excited and jacked up, but not sure what to do with all that energy. And so I made David an offer he couldn't refuse. I offered to go work for him for free. He was a solopreneur dude. He owned a good portfolio of properties, but he didn't have an assistant. He just kind of did it on his own for the last 20 plus years. And
Oh,
but I saw he had some struggles. I saw that he would get frustrated with returning calls and just the little admin stuff, he should have had an
yeah.
assistant for. And anyway, I went to work for him for free. That was the start of it. I literally worked for him in between going to classes, and again, I only worked in the evenings, like Thursday, Friday, Saturday in the evening time, and so I had a lot of free time during the day, and so that was a start. But I did that for about 14 months, and then bought that first property at the age of 20, and that's where it kicked off, man. I kind of followed his methods to a certain degree. Didn't try to fix what wasn't broken, and really focused on single family and
Yeah.
some smaller multifamily stuff in those early years, and that really morphed when I moved to Florida. I moved to Florida when I was 22, so spent 2 years up in Pennsylvania, just kind of piecing it together, trying to figure out the little nuances with buying single family properties and running the property management side of it, and just lots of heartache for only a few properties. And I only until I moved to Florida did I really get a bigger vision and picture. And that's when I met still to a dear friend today. Met him when I first moved here, Rod Cleef. I met him
Yeah.
and his family, and he owned like 700 single family homes when I came down here. I was like, I mean, that was just a different magnitude. One I had never even I'd never met anyone with more than like 30 or 40 properties, right? And to me,
Yeah.
like that was Trump-esque in
Yeah.
size. And
Right.
and I met Rod, and he's had this big company, big infrastructure, and I just really modeled what he was doing, and I was able to learn a lot from someone that had been there and done that many times. And so, I ended up buying about 120 single family homes in my early to mid 20s, a couple hundred multifamily doors, lots of smaller multifamily stuff, kind of all compiled over a number of years. Um, and then really, fast forward, 2008 was an absolute disaster down here in Florida. Lost a lot of what I had built up.
Mm.
Florida's a very different economy than what it was back then, just very different on many levels. But we can go into that if you'd like. But inevitably, to kind of fast track where I learned about mobile home parks, I was ready to rebuild. 2008, 9, 10, and really a little bit of 11 were just kind of just damage control, trying to
Mm.
sort the way through the mess from '08 and just kind of dig myself out and just try to get a breath of oxygen. And but I was ready to kind of jump back on the saddle and rebuild. And so I just
Yeah.
I went on exploratory mission and ultimately during that mission of meeting folks that were now in this new world of real estate, right? Because 2011 was very different, right, than pre 2008. And I met a guy with mobile home parks. Literally, it's an asset class I'd never considered. His name was Randy. Had lunch with him just because a friend of mine said you should go meet Randy. He was an ex-banker, commercial banker for 30 years. He's a good dude, knows a lot of people. Didn't know anything about mobile home parks, and I went and met
Oh
with him,
yeah.
and he sold me on many different ways of why I should abandon the idea of going to buy either single family or apartments or other commercial real estate, and you should go buy a mobile home park, and here's why. And he gave me like kind of a list of like his
Mm.
reasons why, and I was so intrigued, buddy, that I left that meeting. You couldn't go buy books on it. There was no information. There was no podcast
Yeah.
on mobile home parks. Today there's a lot, but there wasn't back then, and I just
Yeah.
started calling brokers, making offers, getting cold feet, backing out. Finally bought one about 14 months
Okay.
later. And,
Okay. Yeah. Yeah.
that's
That's
when it kicks it all off, and that's 2012. And so fast forward to 13 years later, and we're still buying them, and it's been a
yeah.
fun ride.
And we'll jump into that. Yeah, no, I know there's a lot. Just say, hey, tell me your story. It's like there's a lot there. So I want
Yeah.
to back up and unpack a little bit. So you were a young guy, you were in college. I
Yep.
love in your story, you were able to find some mentors. You found David, who you just kind of work for free, right? Who can turn that down, right? You're gonna work for free, but you learned so much and it allowed you to really scale.
Yep.
And then Rod Khleif's a friend as well. And he's such a inspirational guy in a lot of ways. And also
Mhm.
just a larger than life kind of figure. But yeah, I know he made a lot and then he ended up losing everything and then he like
Mhm.
made it all again, or sorry, he made a lot of it again. So it's interesting how, even people are very successful how to go through challenges, but
Sure.
just the evolution, I started as well with single family, then went to multifamily, and then we're doing a lot of other private business stuff and things now, e-commerce businesses, other things in oil and gas. And
Mhm.
it's just amazing how as an investor you can keep growing and developing. But you found, and I love, mobile home parks are awesome, right? They're just such a great asset for so many reasons, and a lot of people have never invested in them. So talk to us.
Yeah.
A lot of our investors are multifamily or there are other types of assets. Why should somebody who's not a mobile home park investor consider it, or what are some differences between multifamily and mobile home parks, and what do you like about them?
Yeah. Yeah, no, I think there was probably even a couple more differences back then when I was introduced to them, that some that might not exist today. What I mean by that is back then, if a apartment complex was trying to do apples to apples, right? A 50 unit apartment complex to a 50 unit mobile home park in the same city. Apartment complex might have traded at a 7 cap. The mobile home park would have traded at a 10 or 11 cap, right? And so like that
Right.
was that doesn't really exist today. That's been extinct now for a number of years. In fact, find that even Green Street data has shown in over certain quarters that mobile home parks have actually traded at lower cap rates than that of traditional multifamily, which is quite interesting. But in any event, some of the big ones that really stuck out to me that got me excited about the asset class, and again, you got to remember this is me coming from. I basically built up a single family home portfolio, and I managed it pretty much myself with like an assistant until I got to like I basically I was always in a reactive state, trying to learn business, trying to like do this thing on a whim and not having some mentors, but like still trying to learn on my own along the way, right? And making mistakes the entire time, just trying to learn from those mistakes. And so I was always in a reactive state of hiring the people I needed, right? So it was just always working 60, 70 hours a week to just hustle, just to
Yeah.
make money and keep the keep the bus rolling forward. And so ultimately I learned a lot during that period of time. And so when I went back and looked at mobile home parks, and some of the things that really were intriguing there is like immediate scale for me, right? Like just some immediate scale, being able to buy in at a attractive cap rate, at a solid price point. But more importantly than that, back to the single family stuff, is that ultimately the turnover is what kicked my ass on a regular basis, right? Especially trying to manage this stuff myself. It's a little bit easier once you've got staff and all that, right? But even then, management's tough. It's just a tough
Yeah.
go. It is. I
Yeah.
don't care what type of asset class you're in. I mean, at least residential is tough because there's a lot of turnover. And so with mobile home parks, one of the attractive factors there that again, Randy really intrigued me about, he's like, look, most of my residents own their own home and they just pay the lot rent. He's like, so literally, we get turnovers, and don't get me wrong, every once in a while they might pass away or they just truly might abandon their home. He's like, but that's few and far between. He's like, turnover is incredibly low because what ultimately happens is they'll pay their lot rent, and if they want to sell their home or move on, very rarely do they ever move the home. They just put it up for sale like you would a single family home. They continue paying lot rent until the next person moves in and takes over that lot rent responsibility. And I'm like, that's a beautiful thing. So you don't got the downtime, right? You don't got the 2 or 3 months of
Yeah.
downtime to make ready a unit. But then on top of that, you don't have the uncertainty, right? You don't have the repairs and maintenance associated with it as well. You don't got the roof repairs, the AC repairs, the plumbing repairs, all those things that require additional maintenance staff and just add additional nuance to the day-to-day operations. So I mean, those are like some of the huge ones that just stuck out to me because I was already built something, I lost it, and I'm like, well, if there's a better way to do it this next time around, a more efficient way to do it, I'm all ears. And so to me, that seemed like a more efficient way to go about rebuilding. And so, I love the idea of sticky residents. That's what he called them. That's what we refer to them as. I mean, they're sticky residents. We've got a number of communities where we've got residents that have been in there for 40 plus years.
Wow.
So I can think of a few that have been there for 50 years. And then also on top of that, we've got multiple family members living in one community, right? You've got, maybe parents move in and then the kids and then the grandkids end up buying a home. And now we've got 3 or 4 generations of family members living in one respective community. That also equates to stickiness. They stay around for quite a long period of time. So,
yeah, no, you brought up a couple of things I think are really interesting. I think that a lot of people, we mentioned, you lost some stuff in 2008 that was really hard. I know Rod lost everything when I heard, $50 million net worth, basically almost to zero that he lost. We've had some challenges with some of the deals we've done and some of the multifamily stuff. We took on some bad debt there. Also had a options trading thing I did, years ago before I got into real estate, and I realized, well, this isn't a good fit. But everything, nothing happens to us, it happens for us, right? So we grow, and like you said,
that's
when
right.
you rebuild, it's something. And I think this is the part that some investors don't get, is that everything is learning, everything's information. There's no but I mean, Robert Kiyosaki, some of these guys have been bankrupt multiple times, and it's just that's part of the path of success, is going through challenge. And then once you've been through it, then you're like, oh, okay, I know kind of to avoid some of the stuff before, or I want to get into something else. And then you're kind of hyper alert that when something starts going not the way you want, and when you look at something, oh, that could actually go pretty bad at some point, and hopefully you can see risk a little differently. But so let's talk about mobile home parks and risk. I mean, what's the biggest risk of investing or owning a mobile home park, I would say, from just a management standpoint and investor standpoint?
Yeah, it's a great question. I think we could take it from a couple different directions. I mean, you could speak to, there's different qualities of mobile home parks, just like there are single family home neighborhoods, just like there are apartment complexes, right? You've got communities that might be in the wrong part of town, wrong side of the tracks, which is just a tougher tenant base, right? Like you get turnovers, you got all the negative elements that you don't want, right? But that exists in any asset class. It's not just respective to mobile home parks, right? So I think your demographic that you're serving, while we're providing affordable housing, being very keen on what part of town is it in the area where there's path of progress, like positive things are happening, or is it like everything's moving away from that area, right? Like ultimately that could be a risk. And so that's a big one. I think another one where I see a lot of folks kind of make mistakes, and this was kind of put on alert for me earlier on by a guy that had been in the space for quite some time, was you see a lot of, number one, there's a limited supply of mobile home parks, first and foremost. And a lot of the major markets are fairly consolidated. The big markets across the country. I'm not going to say there's not, some needles in the haystack that can't be plucked out. But when I say consolidated, they're owned by bigger operators, professional groups, and a lot of the, the value component's been extracted out of it. Not that they might not trade in the future, but those markets are fairly consolidated. So it's really pushed buyers into secondary markets, but then also tertiary markets, and then maybe even frontier markets, like really far out. And I think folks start shopping on the allure of cap rates again, right? Because you start thinking like, how could I ever lose if I bought a 10 cap, right? How could I ever lose if I bought something on a 12 cap? However, looking that it might be in this frontier market where there's literally only one or two employers, small town, not a lot of population growth, one of those businesses, one of those factories in town go out of business, guess what happens? Folks don't have money, they don't have jobs, and they can't afford to pay. I don't care what type of cap rate you're buying it on. So I think there's risk associated with mobile. Not that there's not apartment complex in those types of towns, but I see there's definitely mobile home parks are easy. You see a lot of mobile home parks in those types of areas because it's very easy housing to build, right? Infrastructure is easy
Drop
to
them
put
down
in.
there. Yeah.
They can get units even if the closest factory is 6 hours away, they can truck those things in. That's much easier than getting the crews and labor necessary to build a subdivision or apartment complex right in a rural area like that. And so anyway, I think there's a big risk there. But outside of that, I think weather risk is real. I mean, just looking at where I live here in Florida, we don't own any assets within the company in Florida, or actually at this point any real coastal regions. But I think there's a big risk there. With tornadoes also, in the event that a devastating event comes through, and you might find yourself in a situation where the entire community is wiped out. We've got insurance, we got loss of income insurance and things like that, and we've got plan B and plan C's in place. We work with FEMA in the event of a devastating occurrence like that, because FEMA ultimately comes in. FEMA's looking for places that can quickly put housing. Yeah. And most of the time, most of our communities have underground infrastructure. And so it's, while the units might have been blown off, we've never had this occur, but what you'll find is that FEMA comes in and will basically bring units in. Yeah, and so you've got some backup source of income there. But I think those are the biggest ones. I think truly weather risk is huge. And it's not that you wouldn't be able to rebuild. Surely you can. But I think lastly, speaking to that, there's some parks that in the event that would occur, that are grandfathered in, that might have incredibly tight density that's maybe even 2x what would be allowed today if they're to build, meaning that they're really close together. Maybe they've got some older, sewer systems in place that you would never ever be able to get a replacement for a septic. You kind of can use what you have, but once it goes bye, you might end up losing a few units to put a new septic in, or you'll get a sewer there. So I think there's a risk there. Just old infrastructure is real. A lot of these parks were built back in the 50s and 60s, and I think that's an area that's probably where we spend the most of our emphasis when we're buying. Everyone should. Where due diligence is absolutely critical, but we really dive in to not what's above the ground per se, but what's below the ground and what could be the gotcha. Because that could be the difference of a great deal. Even if it's in a great market, it could be a great deal to that of unexpected, $1 million infrastructure upgrades or improvements, or, the potential of losing some revenue producing units because of what the infrastructure setup is down below. So anyway, there's a number of them there.
That's a lot. Yeah, no, that's great. I think, well, it's like the iceberg principle, right? It's the stuff you don't see, but for you, when you have experience in something and you've, seen something, you've been burned by something, you hear the story, whatever, you kind of know, oh, I got to look for this. So it's, it gives you a big advantage when you come into some of these assets, which are really huge. So I've been looking into, it's a little too soon to kind of do this, but in LA, we've had these big fires, and unfortunately there's a town nearby where about 40% of the single family houses burned, like literally burned to the ground. And that's really unfortunate. And so, but what happens is people get paid through the insurance. It can take months or years, but they get paid, and only like maybe 50 to 70% actually rebuild. A lot of people just sell these houses. So I'm considering not mobile home parks, but like modular type homes they can bring in, where it's the same concept. They build them somewhere else, they bring them in, and something can look pretty nice. But it's just so much cheaper than building in California, where it's $500K to $1 million to build a custom home and it can take a long time, versus you just drop this thing in there, it's $300K and it's got the same square footage, and it's nothing to assemble it in a short period of time. And so it's an interesting idea I'm kind of considering. I was going to ask
interesting enough, a lot of modular, there's a lot of the mobile home manufacturers. So like, Clayton and Champion are the two largest. They're the big, behemoths in the space, and there's a litany of others, but a lot of their factories where they might produce 90% manufactured homes in those factories, but a lot of the floor plans that actually we see in mobile home parks, they literally have the ability to produce a modular version of that, which in that situation can go there's no zoning restrictions. Like if you could build a stick built home there, then ultimately there's no restrictions on why you can't put a modular in the same place. Now there might be restrictions in a certain neighborhood around like square footage minimums or height, requirements, or obviously setbacks and things like that. But generally speaking, you should technically be able to put a modular anywhere that you could put a stick built home and do it at a fraction of the cost and a fraction of the time.
Yeah, I heard there was another group using containers or shipping container homes as well, where if you had the footprint, same kind of thing. You go in, even like really nice high end homes, you could go in and basically, cut them to size and do all kinds of back about to an inch of where they, wherever those plans are. But they're getting pretty creative on something now. 3D printing has 3D printing become an option for you guys in the mobile home park space, or not really? It's
not really. I mean, I'll see articles every once in a while where, I mean, I think it's still in such a preliminary stages. People are kind of tinkering around with it, trying to figure it out. But I do think, I think it's realistic to think that like that technology will have a huge impact on our industry as well as many others. And there will probably be something that really comes to fruition that will be consequential in size in the next couple of years. I think something that will have a positive impact in one form or fashion or another, as relates to maybe it's quicker builds or just elements of the unit that they can do with a 3D printer that might have had to be built by hands, whether it be cabinetry or maybe the whole thing. I think we're a little bit away from that of having an entire home 3D built, but maybe I'm wrong. I don't know. I don't keep up on the
no, I think they can, it depends what material you use, but like a stone or like a cement, they can do it on the outside. The challenge in a place like California, for earthquakes, it can potentially crack and there's other issues, but they can do kind of like a 2-layer to where you can kind of put insulation in the middle. At least you have kind of the outline of a house, but then you got to figure out, you're going to put, you're just going to paint it, or you're going to put drywall on the inside. Like, what are you going to do to kind of make that? And you're going to live kind of some kind of concrete hut kind of thing, or there's some challenges there, but well, I wanted to talk with you about something that you mentioned. It's a small part of what you do, but I think it's a very interesting part because I don't hear a lot of people talking about it. But let's talk about parking lots. I know you're invested in parking lots, parking structures. Talk to us about how you got into that, and also kind of how is that similar or different to some of the other investments that are out there?
Yeah, no, great question. And it's I guess you could say it's a newer asset class for us. We've been buying them now for 5 years. It was introduced to the space about 7 years ago through an interview just like this. I had a guy on my podcast, and he owned a number of parking assets. He was one of only a handful of brokers that actually specialize in that niche, which is, it literally is, even to this day, it's less than a handful of that truly, that's all they do is transact parking. And I was intrigued, and I asked a lot of questions, and I thought it was a unique business model, a lot deeper, as far as like just the dynamics of it were a lot of a larger scale than what I anticipated. In my mind, it's like, you and I have both been somewhere. We paid for parking, we pay for an hour, we pay for the day, whatever, and then we leave. Right? It's pretty simple, but there's a lot of other elements associated with a parking operation. But in any event, I was intrigued by the conversation enough that I just never could stop thinking about it. I left the interview. I woke up the next day, thought about it again. I brought it up to my business partner at the time, say, "Hey man, I had this great interview. Just go listen to it and let's have a talk about it. If it intrigues you as much, we should talk about it." And so we started going. We don't take these decisions lightly. We never want to dilute our focus with what we do. And manufactured housing is what we do, right? That's what that's what we've spent so many years building. And so we don't want to dilute our focus. But we're like, okay, well, let's start going to some conferences. There's a couple national associations. We went to those, got to know a little bit more about the industry, got to meet people in the industry, and still was equally excited, if not more, the more we dug into it. And so what we found is that it had a lot of similarities to mobile home parks. It was a very fragmented asset class. There's a diminishing supply of parking across the country. A lot of large cities, large and medium-sized cities across the country have completely eliminated their parking requirements on new developments over the past 10 plus years. And so what you'll find is that, number one, when new developments occur, they're only putting in enough parking for their units and barely that, right? They make more money by putting a multifamily door or a condo unit up there than they do a parking space. And so you find that, there's not really any new supply coming in. And then a lot of the surface lots or those flat parking lots that we've all parked in as well are getting developed into these, these high rises, whether they're probably no longer office, but some type of mixed use property, condo, multifamily, residential, what have you. And so you've got this diminishing supply. And so it allows us to get into an asset class, we like to call it irreplaceable real estate. So it's got there's a lot of factors. Like we'll look at last year, we looked at 111 deals and we bought one. And we probably underwrote like 15 of those 111, right? Like truly went through a full blown underwrite and bought one out of that. And a couple of different reasons. Number one, we need a diversity of demand drivers. And what you'll find is that a lot of parking in really desirable locations, like you pick any major city, like the central business district. A lot of this parking was probably originally when it was built, whether it's built in the 70s or 80s, it probably was built primarily to serve office. Either one office building or multiple office buildings. And it doesn't mean that it doesn't have hourly transient parkers. It doesn't mean that there's not other types of venues nearby that they're providing parking for. But you'll find that like a lot of stuff, it's like 80% of the parkers that were in there are related to office, which is now that's something I don't know how to fix that problem, right? And so a lot of
Yeah,
what we
right.
look at, a lot of what we look at, it's got a disproportionate share of folks that used to park there that were office people that I don't know when or if or will they ever come back? Probably not, right? And so, and I don't know how to fix that problem. I can't create more people in that area, and so it's got to have a very diverse nature of parking, with office being the lowest of the tiers, right? And the rest of them have to be like government. Government's huge. We have got a parking garage right across from downtown Phoenix, Maricopa County Courthouse, right? And it's right 2 blocks away from the courthouse, though, is where the Phoenix Suns play. So we've got that going for us. And
Yeah.
then it's a Phoenix is a 24/7 cities, right? So we got people that are there during the day, they're there at night, and they're there on the weekends, right? So we got all these different variety of elements, and we have office there. But if that goes away forever, which it won't go away forever, but inevitably there's a risk of one of those potentially going away. We know that we've got a broad-based split amongst all those demand drivers to where we're not just, we're not in a risky environment where if office goes away completely, no one's parking in the garage anymore. And so it makes for a lot of what we look at doesn't check all of our boxes, and we move on. But it's been a fun asset class, and the same thing that we have in multifamily, the same thing that you guys see, the same thing we see in mobile home parks, the same things that occur here. Just value add stuff, pulling different levers. We bought a parking garage 2 years ago in Clearwater. We bought it from the city. It was only like a 6-year-old parking garage, and their parking rates were $3 an hour. The average on the beach was $6 an hour. Everywhere else. Everywhere else. And on top of that, on busy weekends, there's flat pricing. You might pay $50, $60. They weren't doing that. We literally, the one lever we pulled when we bought the garage, we changed the hourly rates from $3 an hour to $6 an hour. Guess what? We didn't lose any parkers. So there's the same type of value add pricing components that exist in parking that exist in a multifamily asset or any other type of commercial real estate, right? It's just finding a more efficient way to operate it, keeping up on market trends, what's happening, and just being in tune with what's happening in your respective market and your parking garage, your parking facility, and there's always levers to pull there. So
it is interesting. You talk about just really adding value, right? It's the story of adding value, whether it's a single family and you're flipping it, or it's a multifamily and you're doing renovations in the units or the common areas, mobile home parks. There's value add there as well. Maybe you're including new amenities or other things. Same with parking lots. So it's just the value add approach, right? And that's how people get paid. And even from a business perspective, right? I mean, you've had podcasts and masterminds and other things, and you do those until they like, okay, it's not quite adding the value that it was. Like I have things that I start and I stop, whenever I keep finding, this other thing actually over here is going to add more value.
That's right. Yep, absolutely.
So
it's a great asset for us. Like at the end of the day, like when we look at like the bigger picture, it's got to stand alone today as parking. And we look at it as it's got to be a prime location to where parking is the lowest use that will ever exist on that particular parcel of land. It's an irreplaceable parcel of land that's in a center of a thriving area and a thriving city. But it's got to make sense today as parking. So we got to be able to get the numbers to work as parking. But we know inevitably, whether it be 10 years, 15 years, 20 years, there will be a higher and better use, and we'll have a prime located acre and a half, 2 acre plot of land in a just a booming marketplace. So like we don't underwrite that. We're not developers. We never put that developer hat on, but we know that inevitably the time will come at some point where
somebody's going to want to develop it.
It will get redeveloped, right? And that will be even the bigger pop.
Yeah, that's great. No, that's awesome. Well, it makes sense that you're finding new ways to add value and jumping in there. Well, Kevin, I really appreciate you, man. I've been following your stuff for many years, and I've been on your show, I think a couple of times now. I think we've had you a couple of times on this show as well, but just always learn something when I talk with you. I appreciate how much value you add everywhere you go, and how you're always trying to make the world a better place through investing and through making, communities that really help people. So how can people follow you and hear what you're doing?
Yeah, no, I appreciate that, Bronson. I mean, I'm really active on social. LinkedIn, I spend a good bit of time there. I've got a unique enough name where you just, type in Kevin, but my last name Bupp, and I think I'm the only one that pops up. At least that's in real estate. So pretty active on Instagram and Facebook as well. And then if you want to learn a little bit more about what we've got going on at Sunrise, you can go to investwithsunrise.com. We've got an offering that's up there, but more importantly, we got a good bit of info. We got some case studies that we put on the website of just historical deals we've done, some things that we still own today, some things we've gone full cycle on. We even put in third party reports and different unique things like that we feel add value, appraisals, from when we bought, appraisals from when we sold, things like that, that ultimately people can learn from. But again, yeah, just if you'd like to learn more about parking or mobile home parks, that's the place to go. So.
Awesome, brother. Well, I appreciate you. Thanks for being here today. I look forward to connecting with you again soon, and just really appreciate you, brother.
Awesome, brother. I appreciate Bronson. As always, pleasure speaking with you, and I appreciate all you do as well, man. Keep up the good work.
Thanks, brother. All right. Well, I hope you enjoyed that interview with Kevin Bupp. Just really awesome guy. And again, some of the takeaways that I got from it is that, it's okay to keep reinventing yourself. It's okay to go through challenges. Like we talked about in the interview, some very, very successful people have had challenges in their investing. And I'm of the opinion that life doesn't happen to us. It happens for us, right? It happens to teach us. That loss, that setback, getting fired from a job, which has happened to me once, or going through a personal struggle or divorce. These things are like, they don't happen to us, they happen for us. And these are all things that produce growth in our lives when we say yes to the growth opportunity. So I hope that whatever comes your way, you're able to find a way to turn the lemons into lemonade, right? You're able to find a way to turn the challenge into something that actually you can use, and it changes your perspective going forward. The older I get, the more I realize this is true. And a lot of times there's a choice. Do I get bitter that this thing happened? Do I get angry or it's somebody else's fault? Or do I learn the lesson? I say, okay, well, this happened, and it doesn't mean I'm this type of, I'm a failure as a person, but it's that whole growth mindset, right? That book called Mindset by Carol Dweck talks about that growth mindset, right? Somebody who looks at everything, it's just, ways to grow. So if you haven't read that book, I highly encourage you to read it, called Mindset by Carol Dweck. If you haven't joined our investment club, you're not hearing about our amazing deals coming up, check it out. The link below, go to bronsonequity.com and we'll start a relationship with you. You can hear about our upcoming deals. And thank you for taking the time to educate yourself. I look forward to seeing you on the next episode of the Mailbox Money Show. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.